Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Monday, August 4th, 2014, and we're going to look at the SPY in a second, but what you're looking at right now is the chart of an equity that my members were issued on Friday, okay, at about midday, okay, right here at 2570 was the number. I'm not going to tell you what it is because the members are just in this trade and there's a lot more upside to be had, so I don't want to spoil it for them and give out free stock picks that they're, or trade alerts that they're paying for. So here's the deal. So we issue the trade alert at 2570 on Friday about midday, okay, takes a little dip down, carves out a bottom, and then this morning we opened up a little bit of a gap up above the 50-period moving average, and off to the races we went. We retraced about half that move from Friday's low, and then we kept going up and finished at the high of the day. Now, the reason this is important, number one, is because we negated the entire down move from last week. That's number one. Number two is we're at a bottom in the chart. And number three, I think there's a lot more upside. So that's the other reason I don't want to give it out, because it's not fair to the members. But we're up about 2% from the entry price, and that's only in one trading day. And I just want to show you the power of having the proper time and price converge together. And when that happens, the probabilities lean in our favor, and that's why we issue the trade alerts. Okay, let's go over and take a look at the SPY, okay, and we have a lot to discuss here. So let's go back to the daily chart, and I want to show you a couple of things. So if you recall from last week, I said the market would stall out around this 192.5 area, and that's exactly what happened. Okay, I said right in this vicinity here we would stall out, and that's exactly where it did. Now, we had an update today, kind of was a little shaky in the morning, but then in the afternoon, the volume wasn't too bad. It was lighter than Thursday and Friday by about half, but it wasn't too bad. It was still above average, and I think some of that had to do with some short covering earlier in the day. Maybe yes, maybe no, but nevertheless, it was decent volume. And here's what we can expect going forward. Okay, so if we put in a short-term bottom, okay, that would mean for anywhere from, let's say, I don't know, a week, give or take a day or so on either side. So it's anywhere from, let's say, 5 to 7 trading days. That's high probability, okay? Now you'll have in the middle here, here's what you'll have, and you've heard me talk about this before. You'll have one of these up moves, a down move, another up move to complete the correction, and then back down. Okay, so if that's going to happen here, and I have some other probabilities too, I'm going to go over 2 or 3 different patterns that may unfold over the next week so we can be aware of what's going on and trade them accordingly. So that's one pattern. So you'd have maybe another update tomorrow, okay, maybe a pullback on Thursday, and then, a Wednesday, and then Thursday, Friday up possibly, maybe Thursday up, Friday pause, and then back down Monday, or Monday flat and back down Tuesday, something like that. That's an A, B, C pattern, and then maybe a failure. Here's a number to watch for. Okay, you have, by the time that later in the week rolls around, this high, okay, from this day, okay, 195.78 on the SPY will pretty much coincide close enough with this 50-period moving average, so that could act as a lot of resistance, okay? And if that's the case, we may just trade up into that and then fail. That's another possibility. And another possibility yet is we go and challenge the highs, which it's possible, but I think that's the lowest probability that I see. So let's just take a look at a Fibonacci retracement and see what kind of numbers we can expect. So we go to the high, okay, from last week. We come to the low from last week, okay? And then today we almost made it to the 382 retracement, which is at 194.41, okay? And then the next stop would be 50%, 195.30, All right, and then the 618 is 196.20. Okay, I think that's a highest probability retracement on this move. You're going to have a lot of buy the dippers. You're going to have a lot of bullish sentiment come out this week. If you don't have a lot of economic news and you don't have a lot of geopolitical news, then you can certainly trade up into that 618 this week. But I still say midweek we'll probably see a pullback. We'll take it one day at a time. Let me get rid of these lines. So that's basically what I see for the SPY this week, and we'll just take it one day at a time. Like I said, there's no telling exactly what every day is going to bring. I just give you the three probabilities that I see unfolding. Could we turn back down tomorrow and collapse below the lows? Of course we could. If something happens overnight, early in the morning, and it jolts the markets, of course we can do that. I just don't see it happening unless we have some kind of an event take place. No event, we probably get some higher prices through the end of this week. That's my best analysis for you. All right, let's switch over and let's take a look at the gold market. GLD was down a little bit today, 39 cents. Nothing really going on. It was just down 39 cents. No reason, no big move, just down. So what do I see here? I still see this is the good buying opportunity. I'm going to call it between 122 and 123. If we can get that number in the next week or so, I think it's a buy. Let's go over to the GDX chart, which is the gold miners. And same routine, only this chart actually looks healthier than the GLD chart. This long sideways consolidation, we know about the head and shoulders pattern, the inverse head and shoulders pattern that I talked about. And this is staying above that neckline, so we're setting up for a move at least $10 higher in my mind from current prices, but it's not ready to go yet. It's going to coincide with gold, and I think we've got some more sideways and a little bit of downward consolidation in the price of gold, which would maybe mean the same thing for the gold miners. So we're going to stay away from GDX until further notice, but it looks good. It looks like we're going to be able to make a good, healthy trade shortly. That's going to be good for, in my mind, that's going to be good for 25 to 30% on the upside. So that's a big trade coming in my mind. I've been talking about it for a while. I'm kind of excited about the GDX trade. Let's see what we have in oil tonight. USO is up slightly today, and mainly because we found some support last week on this 200 moving average right here, this black line. We pierced it, we closed right around it, and then we popped up a little bit today. But I don't think that's a bottom in USO. Let me see if I can squeeze this a little bit. So I like this low better. This pierce of 35. And if we get a pierce of 35, I think that's a better entry point for some upward momentum in oil. So we're going to keep our eye on that. We'll have to see what happens when it gets down there. If it comes down there with a bullish pattern or a bearish pattern, will determine whether or not we take a trade or not. So we'll play that one by ear, but that's what I see in oil. Don't take this trade. It's not a good one. I think this is a fake out. Maybe you get a couple of days of up move, but I think this one turns back down, and I'd like to buy it below 35. That's my number. I think that's it for tonight, folks. Not much happened today except the market floated up. It's a relief rally. It wasn't a real healthy rally. It's not like institutions are running to buy the stocks, buy the market. It was a relief rally after a sell-off. We had the largest down week we've had in a couple of years last week, and the market's going to have to relieve some of that downward pressure before building up some momentum further on the downside. So that's where we are. We're going to leave it there tonight. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis. Thanks for tuning in, folks.